Hi there, welcome to Indian Markets Live. I'm Devina Munro coming to you live from the Mumbai studios. Here are the top stories. The market takes a U-turn, gives up its morning gains. Nifty falls more than 150 points from the day's high and slips below the 8,700 mark, weighed by banking and auto stocks. The mid-cap index shows some resilience but trades in the red. Insurance companies get a further boost as the insurance bill gets the Rajya Sabha nod. Industry voices give it a thumbs up. SBI Life Insurance tells Network 18 that the company is in preliminary talks with PNB Paribas and brokerages to sound bullish. Tata Motors is subdued in trade today. JLR's total retail sales declined 5.9% year-on-year due to a product transition phase. And over to the markets now. Well, the markets trade in the negative today with the Nifty down below that 8,700 mark and the Sensex below 28,660. Both the benchmark indices are down about 1% each, as you can see in trade right now. The Bank Nifty, of course, is marginally underperforming as well, down about 1%, while the mid-caps are actually outperforming the frontliners, but still in the negative, down just about 0.3% in trade right now. The market breadth stands at 1:2 in favor of the declines, of course. Now, amongst the sectors, not even one gainer actually, but from the sectors that are lower today, it's realty that is losing heavily right now. As you can see, it's down about 1.5%. Media also losing about 1.5%. Capital goods down about 1.2% right now in trade. We also have FMCG and auto. Both those indices, as you can see, are losing about 1 to 1.5% each. Going over now to the Nifty, so we'll check on the losers first. It's Axis Bank, which is one of the biggest losers, down 2%. Bajaj Auto also down about 2%. DLF also losing about nearly 2%. You could see in trade right now. Sun Pharma, a pharma stock over there, that is losing about 2.2%. JSPL losing about 2%. L&T losing about 1.5% right now. And exactly 6 gainers on the Nifty. So it's PNB that is gaining about 1.3% right now. Coal India gaining about 0.5%. United Spirits gaining about 1.2%. We also have Asian Paints, a stock over there that's gaining about 0.5%. And then you can see NTPC and ONGC, both those stocks gaining just about 0.2 to 0.5% each in trade right now. And in market opinion, Ajay Srivastava, CEO of Dimensions Consulting, says that the passage of the insurance bill is positive for the economy and also paves the way for other reforms as well. Hear him out.
The fact that it has gone through and so quickly in a constructive frame of reference, and it's very great positive for the economy for 3 reasons. I think one is it's a great pointer to things to come, that it's not all going to be confrontation, it's going to be cooperation where it makes sense. That's one important takeaway. Number 2 takeaway is that it's going to give you the kind of capital that you can't even imagine. And you know, we are just at the 49% threshold. When the next threshold come up 51%, another big floodgate will open. So I think it's a great access to capital. Number 3 is that, you know, this takes us into a different league in terms of the insurance products and penetration in the country, and which is the biggest investor in domestic equity markets, in the world over. In a longer run for the insurance business, for the companies which own insurance business, but also greatly for the domestic equity market, because we always have suffered this inadequacy vis-a-vis FI flows. Partly it's getting addressed this year, that we already seen domestic inflows into the mutual fund outrunning and outgunning the FI flows. But in a longer perspective, I think it's a great move, and it's going to be a phenomenal move for both equity market as well as the company which own insurance companies. And we just seen the tip of the iceberg. The valuation of these companies is going to go sky high over the next 5 to 10 years. In spite of an entry of a new 4G partner in the game, I think there'll be a lot of sense in the market, and therefore I would tend to believe that on the PE basis or price to book basis, there will be an expansion in valuation over the next 2 to 3 years, having frozen the spectrum issue and the cost. To extent valuations are overreaching, but I still say a 3-year story or a 5-year story is there. Do not junk domestic pharma story. Keep adding up every correction you see, keep add. This is a, add at corrections, not a sell.
And over to Asia now. So it's a strong day of trade for the Asian markets. Japan's Nikkei hits a fresh multi-year high, breaching that 19,000 level. As you can see, the Asian markets over there, sea of green. Nikkei 225 gaining about 1.5%. Shanghai gaining about 0.5%. Hang Seng also up about 0.2% right now in trade. We'll also go over now and take a look at the Kospi, that is in the green, gaining about 1%, while the Straits Times and the Taiwan Index both are down in the red, losing about nearly 0.2% each in trade right now. And of course, meanwhile, in commodities, Brent crude holds about that $57 per barrel mark on a weaker dollar at about $57.08 a barrel. And the 7-year-long wait is finally over. After the debate, which lasted nearly 3 hours, the Rajya Sabha has passed the insurance bill, which proposes to raise the FDI limit to 49%. The government did not face much of a resistance as the Congress threw its weight behind the bill, even as opposition parties like the Trinamool Congress, DMK and Samajwadi Party staged a walkout. And insurance companies are in focus post the bill being passed in Parliament. Here's what brokerages are saying.
I'll start with Deutsche Bank. They said that life insurance contributes largest to Max India as well as Reliance Capital. In fact, Rel Cap has 39% of its value from life business and Max India 80% of its value from the life business. Rel Cap and HDFC remain their top picks. They have a buy on ICICI Bank, SBI and a hold on Max India and Kotak. CLSA has said that HDFC Standard Life, ICICI Pru and Max Life will be likely front runners from capital market transaction point of view. HDFC Stand Life is amongst the most profitable insurers, maybe one of the first ones to list. Max India is a direct play on insurance and Max India is rated an outperform for CLSA versus a buy earlier. Edelweiss on insurance has said that they particularly like Max India. It's the closest proxy to pure insurance play and they like Max India given its quality of business. Morgan Stanley has said they are positive on Max, ICICI Bank, HDFC and Kotak. They remain underweight on Max India, positive on improving business fundamentals of the company. However, underweight on expensive valuations. It's trading at around 2.5 times FY17 estimated price to book value.
And let's hear out some policy makers and big industry voices on what they make of the hike in the FDI limit in insurance.
I think we've been very clear. There's a bright line that's been drawn in terms of management control, and we intend to follow what's in the Companies Act in terms of control to ensure that these insurance companies, as they grow and they thrive, are very much Indian companies. So as far as the premiums are concerned, that clause has always been part of the bill, even I believe starting as early as 2008 when the first bill was drafted. So that safeguard has always been in place. So I think both honorable members in the Rajya Sabha as well as citizens of this country should be very reassured that their premiums will stay in the country and will be used to, of course, make payments on claims, but also at the same time be used to, of course, build and strengthen the country.
Raising the FDI limit from 26% to 49% is only one of the provisions of this Act. But this Act is actually trying to remove many of the archaic provisions of the previous laws. And in that sense, it is really going to, I would say, liberalize the entire insurance sector and develop it further. So the impact of this particular Act cannot only be measured in terms of bringing in more FDI. There are many other things which this Act is going to do, because of which the insurance sector is going to get a big boost in the country.
There should be no question that there will be new flow of capital coming into India. So that's one part. Insofar as the Max Group is concerned, we are actually in rather a unique and a very sweet spot. We have no obligation, like most, if not all other companies do, to their existing partners to give them the right to go from 26 to 49. So we will play that 23% to the advantage of the shareholders of the Max Group, not at the cost of our existing partners, but we are free.
Very welcome step for the country. I think it's a much awaited step for the country. And, I think it unleashes one more source through which capital can come into the country to support growth. I continue with the stand that there are multiple options and I think all the options remain open. And this is just one more welcome step in kind of helping bringing capital in the country.
And Arijit Basu, MD and CEO of SBI Life Insurance, says that they have commenced discussions with BNP Paribas as BNP is keen to take their stake higher. Hear him out.
We have commenced discussions with our partner BNP Paribas Cardiff after the ordinance was passed. But as you were aware, the foreign joint ventures, they were looking at certainty, and now that certainty has come with the passing of the new bill. The discussions are still at a preliminary stage, but they have indicated that they are keen to take a higher stake. How much that will be, that will depend on further clarity which will come post the discussions. The process could start in the sense that we will have the discussion and what kind of share structure we have. But as you know, it requires a lot of approvals, including SEBI approval, IRDA approval, and it could take a little more than a year to actually fructify. FY 15-16 looks unlikely, but it could fructify in the next calendar year.
And Network 18 managed to speak to Rajiv Chandrasekhar, Rajiv Gowda and Chandan Mitra moments after the Parliament passed the insurance bill. Hear them out.
Everyone was waiting for clarity, and that's what this bill's passage actually ensures. Now, the environment is clear, and you will see a lot more foreign investment coming into the insurance sector, and that is something that the Indian insurance market desperately needs, something that people need in terms of the diverse kinds of insurance products that will make for a rich diversified financial market in India.
I'm hoping that the politics that held up insurance reform is over, because I think this is now a new phase in the development of the insurance market. What clearly was happening over the last 10 years was that with 26% FDI, this was an undercapitalized insurance sector. With 49%, we hope that there will be more capital, and like Rajiv said today and spoke in Parliament as well, that we will have insurance penetration and availability of insurance products be diverse. I think there will be another set of reforms in this, especially focused around reinsurance, especially focused around areas of strengthening the regulator. So this legislation will evolve. This is a great starting point for the opening of the insurance sector.
Very confident about that, because what was holding it up was a very limited amount of FDI that had been permitted. It was very important to raise it to 49%. And which is why government, realizing the urgency, promulgated the ordinance. But an ordinance is never enough unless it's made into a piece of legislation. So today it has happened. I feel a great sense of triumph, and I think the government is really done a wonderful thing, and investments are going to flow in. Absolutely. If you look at the Select Committee report and the bill, this is very clearly defined. Management and control remain in Indian hands.
All right, moving on now. February auto sales numbers. Tata Motors releases its JLR sales figures for the month of February, and total retail sales are down about 5.9% on a year-on-year basis. As you can see, Tata Motors' stock is lower by about 1.2% in trade right now. Here's more.
They've reported their February JLR sales, and that's the retail sales numbers. The numbers are weak again. If you remember, for the last many months, Tata Motors has been reporting slightly weak numbers because they're undergoing a product transition phase where they have phased out their, Land Rover Freelander, and they're going to add couple of new products. So in the interim phase, they're seeing lower sales. Total sales down by 7.6% for Land Rover. Jaguar retail sales have fallen by about 15% or so. And as I mentioned, it is this product transition phase because of which the numbers are lower. Also, there's a big fall month on month. It generally happens in the month of February because there's a number plate change that happens in March. So before that, not too many people buy new cars. They wait for the month of March before taking that particular purchase. We've not got region-wise data from JLR just yet, so we don't know what the geography breakup is. But this stock has been painfully consolidating for the last many months. It hit that high of 612 or so, the record high. But since then, it's just been in a range. In the last 6 months, it's up about 9% or so, waiting for the next leg of new launches from JLR, and only then, I guess, it will move to the next level. But so far, weak numbers. Maybe you could expect the stock to underperform today.
All right, coming up, Network 18 catches up with the big bull of the Lal Street, Rakesh Jhunjhunwala. His thoughts on the other side. Stay with us.